You mentioned talking to legislators. That's something that you do, isn't it? Tell me
Quite
something
a bit
about
of
that.
lately.
Yeah, all right.
Yeah,
So
yeah.
what's your role in that? It's very interesting.
CREFC represents all of the lending and debt investing community. So we represent CMBS lenders, life company lenders, bank lenders, these new crops of debt funds that have come up since the great financial crisis, previous crisis, as well as all the debt investors. So the CMBS bond buyers, the loan buyers, the mezz buyers, those types of folks. So we have been advocating on a number of fronts. The first real advocacy effort on our part was to try to get the CMBS market and pricing sort of back in line. When COVID hit, everyone knew it was going to hit hard assets like commercial real estate, one of the most hardest hit, I would argue, and then that would affect the prices on the bonds. So we saw, for example, on our benchmark bond, which is a 10-year AAA bond that is got 30% credit enhancement, a very strong, safe AAA security. But spreads on that bond went from about 90 basis points over the 10-year swap rate to about 340, almost within a week or two. And that's important because that's a big component of the security. However, we saw down the capital stack, BBB minus bonds really get hit, such that you went from a $90, $100 price point to something in the 60s and 70s dollars now, not basis points. So you lost tens of points on these bonds. What we did was we worked with the Fed, who reinstituted TELF, the Term Asset-Backed Securities Loan Facility.
I remember. No, yes.
TELF.
Troubled
But this is TELF. This is yes, this is different. This was for bonds. And basically what it does is provide investors with a bit of leverage so that you can buy these securities and you can almost assure yourself of having a reasonable return, assuming that you have faith that that 10-year AAA bond is going to survive. And all of them did in the last crisis. So to the extent that it was important to us to get that sort of sponsorship for the CMBS market. And to the good, on April 9th, we were able to get, working with the Fed, who once again took out TELF, which was a sort of part of their playbook from the previous crisis, and reapply it to the current crisis. CMBS was one of the last asset classes to actually become eligible for the TELF program. And to the extent that it really did cause our spreads to go somewhere around 350 basis points on 10-year AAAs to back toward today, where they were about 100 basis points off, which is kind of where they were prior to the crisis.
So how did the TELF work?
It's just a mechanism, and I don't want to get too deep into it because
it was basically a backstop.
It is a mechanism that provides leverage to those investors who wish to buy the bonds, with the idea of enticing people to be more involved in the sector, to feel comfortable that they have some leverage in terms of their return, regardless if this were to go down further. Really, it's to stem losses on these bonds ultimately. And I don't mean realized losses, I mean mark-to-market losses, right?
Okay,
so we're quite comfortable on a 10-year AAA super senior bond that has 30% credit enhancement. You are not going to take a credit loss on that bond. But if you bought the bond at par, 100 cents on the dollar, and all of a sudden it's trading 70 cents on the dollar, then you have a mark-to-market, you have a pricing loss. And so the whole idea is to get people back comfortable to buy these bonds, and it gives them a little bit of leverage such that your returns are leveraged, if you will. And so it brings people into the market, and it quickly corrected the AAAs to a point where they are quite, kind of back to where they were. What's not, as I said, is down the credit stack in the BBB minus bonds, where you may take a loss if losses continue to behave, or I shouldn't say losses, but actual loan performance continues to be as difficult as it is right now.
So it keeps liquidity in the market, basically.
No question. You said it faster and better than I did.